Hello my friends, today is 6 April, 6 квітня in Ukrainian. The previous video was in 4 April, and I told you that we have some dependency on cryptocurrency market, on Bitcoin USDT. This momentum strategy, we calculate one sequences dependency between bars, and I would like to demonstrate you that the same relationship on the stock market is working. It's working today. Looking. You see, sometimes when we have some cluster of market or stage of market, it means we have some rules in this cluster of market when statistical dependency is working. It's very important for quantitative trading because sometimes stage of market is changed, and when is changed this stage of market, it means quantitative trading strategy could be broken. So we have two separate approaches. This is statistical strategy, ST, and reinforced learning. When we use reinforced learning could adapt because reinforced learning has adaptive mechanism, adaptation on a current situation on the market. But now we have some statistical trading, and this statistical trading you could use to improve your trading. Because I test it multiple years and you could make some profit from this. It means, for example, we could make decision by last bars when, for example, we have 5 minutes and we should wait when we have a round of minus like 5 or 10 or 15. For example, now we have signal sell, but we should wait around minute like 5 minutes, for example, because we have 5 minutes time series. Okay, so let's look in on the dependency and calculate some positive returns. Let's look in. Let's take last 200 bars and you could calculate the statisticals, and we see we have some positive returns and negative returns, and it means we have very high accuracy. Okay, if we calculate for the last 1000 bars, it's very nice because it's for quantitative trading it's a big period when this dependency is working. Okay, let's look in. You see total of positive return is 272, negative return is 191. It means also we have some big accuracy. Okay, we need to divide it this value on this value. Okay, so you could use this approach to improve your trading, and you should know when you should change strategy. For example, if your last loss would be more than usual, it means when standard deviation of loss of this strategy is divided, for example 2 sigma, and it means we should change strategy. Because I would like to explain you that we have a different cluster of the market. Let's look in the strategy mean reversing. Mean reversing strategy very nice working when we have some random walk. It's some noise of the market, and when we have some noise of the market, we could define some support line and resistance lines, and when this price is divided by this bound, we could sell, and vice versa. But you see, in this version, it means we have negative profit line because the current situation is not random walking. It calls in data science, non-stationarity time series. We could test it. Okay. So if you do a reverse, it means we divide all signal by -1, and it means we have some sequence dependency in sequences. Okay, let's demonstrate like working with different cluster of the market. When the first cluster of the market it would be a random walk, and we use mean reversing. In another approach, when we have some sequences, so we should use momentum strategy. Okay, and we could change some parameters to find what is the best sequences. For example, dependency between sequences with 4 bars. Let's look in this trade, and we could calculate it. Okay, but the best sequences is 1 bars. Okay, it's very nice. So guys, I would like to show you that in 4 April it's working strategy, and now we have 6 April it's working also, because stage of market not changed for Bitcoin USDT on 5 minutes. But it could be changed if we'll see some abnormal situation. If you see some abnormal situation, it means we could review all strategy. But it could be when we used, for example, Bitcoin USDT abnormal situation. Okay, let's look in this one. I need to add a 5-minute period to make more accuracy, but I would like to show you some demonstration. Okay, stage of the market. You see the abnormal situation was here, the last abnormal situation. Okay, let's look in. But this one, we have another stage of the market, and in this cluster of the market we could make profit. I hope I explain it, clarify for you, and you just test it, and you could improve your trading experience. So guys, see you next time.